Washington State just passed its first income tax, and I've been getting a lot of questions. But before I go any further, I want to be clear. I am not here to tell you whether this tax is a good idea or a bad one. Those are political questions, and that's a policy debate, and it's well outside my lane as a financial advisor. What I can help with is just the math. Because the questions I keep hearing from families aren't political ones, they're personal ones. Things like, how much is this actually going to cost me? Or if I retire to Nevada or Arizona, what would my tax picture look like compared to staying in Washington? Those are exactly the kinds of questions that I answer all the time. And I built a calculator to help us answer those questions, and I wanted to walk through it with you today. The tool that I built compares Washington against several common destination states like Nevada, Texas, Florida, Arizona, and Idaho. It models 5 categories of taxes side by side, so more than just income, it also looks at capital gains, sales, property, and estate tax. Let me just emphasize that this is for illustrative purposes only. It shouldn't be considered legal or tax advice because all calculations are based upon estimates and simplified assumptions and statewide averages. But let's say that we take an individual that's making $1.2 million per year, and all of these numbers are editable and you can go in and change them. Let's say that this person has $400,000 in long-term capital gains, that they have $360,000 in annual spending, a $2 million primary residence, and $10 million in total estate value. If I want to compare this to Nevada, I can select Nevada right here, and we can see right off that it says that I'd save $44,000 per year. Well, how does that break down? In Washington, with the new proposed law, 9.9% on income greater than $1 million comes out to a tax liability of $19,800 for this individual. In addition, they'll owe some money in capital gains, as well as in sales tax and property tax, for a total annual tax liability of around $84,000. In Nevada, they don't collect income tax or capital gains tax, but they do have a sales tax as well as a property tax. And the difference between these two numbers is what you would save. Now, what I want to point out just really quickly is that you can see that Nevada doesn't have an estate tax, while Washington State does. So both are subject to federal levels, but state levels tend to kick in earlier for most people. But the Washington State estate tax is something that with proper planning, you can usually minimize. And so I encourage you, if you haven't done that, to speak to an estate attorney or reach out to me and I can get you pointed in the right direction. Nevada may look like a slam dunk. Certain places like Idaho would actually cost this individual more. That could be the same if they move to Montana, but they might save money if they move to Arizona or if they move to Texas. Look, none of this is meant to tell you what to do. Taxes are one piece of a much bigger picture. Where you live, where your family is, what your business looks like, those things matter too. But I've found that when people can see actual numbers, the conversation gets a lot more productive. You can go from, I heard this could be bad, to here's specifically what it means for my family. The calculator is linked below, and I encourage you to run your own numbers. And if what you see raises questions and you'd like to talk it through, I'd be more than happy to connect. I'm Dr. Brock Benny with Kimball Creek Partners, and until next time, make it meaningful.